Peter Hug up next. Hi, Peter. Thanks for being with us this Canada Day.
You're welcome, Daniela.
Peter, we saw gold get a bounce Friday, following through today. Is this some form of salvation for the metal?
Well, I think the gold and the silver markets were way oversold. I was unfortunately a day early on the bounce. I called it for Thursday and had a tight stop in there, trying to go long at 12.25 with a stop at 12.19, with a suggestion we would see 11.80. And that came to fruition overnight in Europe, and then again Friday morning. At that level, we went long, and I'm still long this market, and I expect that we may still get a backfill. We've got the first backfill when the market dropped from 12.50 to 11.80. There's still a backfill between about 12.60 and the 13.25 range, but it's going to be a difficult week to trade. It's going to be very thin out there.
Peter, in your morning commentary, you wrote that moves may not only be exaggerated but false. Can you explain?
Well, when you have a market that's this thin and lacks participation, and I expect this market to basically roll over and be totally dead by about 1 o'clock Wednesday because of the July 4th holiday Friday. I suspect a lot of U.S. traders will probably take Friday off as well. So in these types of thin markets, it doesn't take a lot to move it. So you could have somebody coming in and buying a relatively small position to cover their short, and have gold run to $1,300 and silver run to $21. That doesn't make a trend change. I'd rather look at this market next Monday to determine where the trend is going to be in the short term.
Peter, we were both at the IPMI conference in Arizona last week, the IPMI being one of the most prestigious conferences in the industry. What sentiment did you walk away with?
Most traders that I spoke to were concerned with basically what the market is concerned with, that interest rates were going to rise. But most were, again, in the camp that the Fed was going to continue to ease on their present course, probably through the end of this year, and then start to decelerate easing, certainly not raise interest rates going into 2014. Once they actually get to a point where they're raising interest rates, they expect the metals markets to take a significant hit. Ironically, though, there were a number of people there that saw 1,500 by the end of the year as still a viable target.
Right, but there's also that other camp speaking $1,000 gold, right, Peter?
Yeah, again, but I think that camp, if you analyze what they're saying, is they're basing everything on interest rates moving up and continuing to move up in the short term. I think the 10-year bond at 2.6 is expensive, and it moved there too quickly. So I'm looking for that 10-year to settle back down into the 2.25 range, which should be price supportive for the metals. The psychology of the market, unfortunately, at these levels, especially from the retail buyer, is going to be difficult to overcome.
Finally, Peter, may I ask support and resistance levels for gold?
Well, again, initially support will be 12.25 after the bounce up through it, but 11.80 is fairly significant support for gold. On the upside, gold needs to take out the 12.65 range, and then if the momentum continues, it could fill the gap up to the 13.20, 13.30 range. Silver, I think, was way oversold on a ratio basis. I think support on silver in the 18.20 range, with resistance at give or take somewhere around 20.30.
Peter, thanks for your thoughts today.
Thank you. You're welcome, Daniela.
And thanks for watching.